Welcome to the Crypto is Key conversation. In today's video, we're going to take a look at a couple different topics. We're going to start with James K. Fallon, where he gives us an update on the Ripple versus SEC stuff. Then we're going to come into a couple of tweet threads from Johnny Deaton, kind of covering the comparison with Jeremy Kaufman and Brad Gallagher in regards of their litigations with the SEC. So you have Library versus SEC and Ripple and XRP versus SEC. And he also has another one talking about security statuses. And then WZX had put up this 24-second clip here that's talking about he's the one responsible for getting the letter that said Ethereum was not a security. So we're going to have a conversation on this. Quite interesting. Digital Asset Investor had put this up. This is Tika Tawari kind of having this timeline here in regards of how the big, I guess the powers that be, or the people that have a lot of money in the industry, or the Wall Street Playbook, as they say, how they tried to create fear in the markets to where they can gather, all your assets as cheap, during, I guess, downtrends or downturns at cheap prices. So as fear is created, retail investors tend to sell off, and then you're selling your assets off to these big players. So they're talking about that because it's pertinent to kind of what's been happening within our market. And then I wanted to have a conversation on just this tweet that Jeremy Hogan had put up here in regards of XRP being on his ledger, and he only buys what he understands. And then we're going to end with this article from Cointelegraph. It says crypto market volatility shows the need for enhanced regulatory and law enforcement frameworks, from Bank of England. So starting with CoinGecko here, we're currently sitting under $1 trillion market cap still. We're at 952 billion, currently up 2% in 24-hour period. If we come down here, Bitcoin is sitting at 20,491. Ethereum sitting at 1,155. Coming down here, XRP sitting at 32.5 cents. If we look at the 24-hour gainers, Curve Dow is up 17.4%, Step-In 13%, and so on. So, very small gainers here. Coming over here to the Bitcoin Fear and Greed Index, look, we kind of shot out of kind of where we've been at last week, being in, these the 10 range and the single digit range. We're sitting at 19. We're still in this extreme fear range, which tells you there's still a lot of market uncertainty, and it's clear and evident based on a lot of things that we've been dealing with, not just in our market, but in all markets. You have geopolitical stuff, you have Russia-Ukraine stuff, you have inflation in the U.S. and Jerome Powell and the Fed and interest rate hikes increases. And there's just a lot of FUD and negative articles and headlines that's been spurring in the crypto market as well. So we're still in this extreme fear range. It's just a matter of time before we finally hit so-called our bottom within our market, to where we finally get, some sort of reversal and we kind of get out of here. Starting with James K. Fallon here, though, he says two attorneys from, I think it's Kellogg Hansen, have filed motions to be admitted to represent Ripple. Please welcome Kylie Kim and Clayton Masterman. Biographies and motions for admissions are below, so you can kind of come in here and click in and kind of see what's going on. So this is just a quick update of kind of what's James K. Fallon's been doing a great job of constantly trying to update the community on everything that's happening within litigation within this Ripple versus SEC case, and they have been covering some of the library stuff as well. So I want to thank James K. Fallon for always doing the good work and updating the community. Starting with going to Johnny Deaton here. Johnny Deaton is talking about what are the 4 things Jeremy Kaufman from Library and Brad Gallagher from Ripple have in common. He says, 1, they are CEOs of companies involved with blockchain technology. 2, they're incorporated in the USA. 3, they cooperated by providing transparency with all token sales. 4, their companies were sued by the SEC. So they were trying to do the right thing. Based on the information that they had, they were very transparent, try to set precedent and set a standard within our industry, and they got scrutinized for it, and they got the hammer placed on them for it. And then Jeremy Kaufman came down here and says, 5, without ever receiving a single sentence of feedback as to what we could do differently. So that's like the big overwhelming theme here is like, they're asking questions. That Ripple was coming down to have, I think it was like weekly or bi-weekly or monthly meetings with, SEC representatives to figure out, hey, how do we go about doing things the right way? And it's like the information wasn't even, given to them. It was kind of like, hey, we're not going to discuss this. We're going to discuss this. Almost like a roundabout answer to the questions that they had. And now we are where we are now under an SEC lawsuit, which is absolutely crazy. This is happening within the United States. Johnny Dean continues here with another tweet. Says, just because you call something a security doesn't make it one. Saying something like cryptocurrencies have attributes of securities doesn't make them securities. There's no such thing as almost a security. If an asset doesn't meet all four prongs of the Howey test, it is not a security. I mean, that's literally what it should be. But the crazy thing is the Chairman Gensler and the SEC have literally almost created this reality through their words, and they're literally only using certain segments within the Howey test, or certain prongs within the Howey test, to literally prove their case in regards of why they think the initial sales and ongoing sales in the secondary market of XRP is a security, which is completely false. It's absolutely crazy. And especially when we're comparing XRP to Ethereum, where Ethereum had an official ICO when it's, in its inception, and XRP never had an ICO. There wasn't an ICO. But they're saying that Ethereum is like Bitcoin, and it's a commodity, it's not a security, but they're claiming that the initial sales and ongoing sales in the secondary market of XRP are securities. It doesn't make any sense at all. If XRP is a security, then Ethereum is a security. But because Ethereum's not a security, it's considered a commodity, then XRP is definitely not a security and should be considered a commodity, or whatever else, whatever other consideration they think it should be. Which I think it was Finson that said something about it's a virtual currency. But this is kind of what we're dealing with. They're hurting investors, the so-called investors that they're so-called set out to protect. All they're doing is hurting us. There's this video clip here from WZX says, quote, "He's the one responsible for getting that letter, getting the letter that said Ethereum was not a security." Whoa, what letter? And he says this was one day before the Hammond speech back in, I think it was June 2018. So let's take a listen to this real quick.
I'm Jeff Pulver, and sometimes I'm Steven's spokesperson, because what he did not mention is that he's the one who legally defined what an ICO is. He created the killer app for Ethereum when he actually created the ICO. He is the one responsible for getting the letter that said that Ethereum was not a security. It's all him. You could thank the entire multi-billion-dollar industry on his shoulders, because he created that.
So this sparked up a huge conversation, and as you can see, I kind of just put more. I think they got rid of it just now, but I put more fuel on the fire because in one of Joe Lubin's speeches, he was talking about having a piece of paper in his back pocket or in his pocket, pretty much saying he had pretty much this green light to proceed with what he was doing, creating this reality of Ethereum being not a security and decentralization and all this other crap that he gloats about. And I think the community has been kind of speculating that, hey, like, maybe this is the piece of paper that Joe Lubin was referring to when he said he had a piece of paper in his back pocket. And they're talking about maybe this is the piece of paper that they've been talking about. So I'm going to continue to update you guys based on what kind of comes out of this. But, hashtag ETHgate has kind of been our big thing within the XRP community and within the crypto community that's involved in following the Ripple versus SC case in general. But it's interesting that WZX had put this up here, because maybe that is that piece of paper that Joe Lubin was, quote unquote, bragging or gloating about in those interviews and speeches that he was involved in. This is huge, okay? So what we're going to do is we're going to watch this and then kind of have a conversation on this, because I truly believe that this is happening, and what we've experienced recently, it is quite evident this is happening. So Digital Asset Investor says there is a reason the traditional financial media is reporting the crypto crash as the second coming of the .com bubble. It's the Wall Street playbook, quote, creating fear in order to get cheap prices. So let's take a listen in Tika Tuari and this gentleman here.
It's an enormous robbery, quite honestly.
It's a huge transfer of wealth that's happening right now. The last time I saw something like this was back during 1994 to 1995. In the early to mid 90s, individuals were making just enormous amounts of money buying companies like Dell, AOL, Microsoft, Netscape, and some of these smaller internet stocks. And the institutions had completely missed that bull market. And so they were scoffing at these so-called lemmings. And so during 1994 to 1995, we had a bit of a bear market. And so, again, institutions were out saying that, oh, anybody buying internet stocks, you're idiotic. And so you had a lot of people selling their AOL, selling their Microsoft, selling their Dell shares. Guess who was buying? It was the institutions. If you look at a chart of institutional allocation to venture capital internet deals, it doubled between 1994 to 1995, which was exactly when institutions were saying, oh, this is just a market for idiots. Mm-hmm. Nobody should be buying this stuff. Mm-hmm. So they literally stole all this wealth that should have been in the hands of individuals that own Dell, Microsoft, and AOL, And then from 1995 to 2000, of course, we saw $5 trillion come into the market, and the biggest bull market we've ever seen. So this blueprint of creating fear in order to get cheap prices is nothing new.
So I highly recommend you watch. I think there was I don't know if Digital Asset Investor, but someone had put up the full segment here where they were talking about how like JP Morgan and them were, they would come out and create this FUD or fear campaign, put out these articles and these statements of, oh, down with Bitcoin, Bitcoin's a scam, yada, yada, yada. But in the background, they've been accumulating. There was even one point where they were talking about how they were scrutinizing their employees and saying that they would be fired if they, purchased or if they purchased Bitcoin. And in reality, behind closed doors, they were purchasing and accumulating on their own. And the overwhelming concept behind this all is, if you have high conviction within this space and within the digital assets that you hold, you don't want to do yourself a disservice, and under these markets and under all this negativity, all this negative pressure, and I will say selling pressure, or this blood in the streets and all this volatility, sell off your assets and allow just these bigger players within the industry continue to further accumulate and so-called take that transfer of wealth back and put it into their hands. Quite honestly, when it comes for my portfolio, I've invested a majority of my capital into solid projects that I have high conviction on. So I'm okay. I can live my, my day-to-day, month-to-month life, cover all our expenses and all that stuff. So I don't really have any reason to freak out and sell all my assets. I've been in here since late 2017, so I've been through the ebbs and flows of this market. I've been through the previous bear market, and I've been through 2 bull cycles. And so I've seen what this market has to offer. And yes, it doesn't change that the volatility hurts, and it sucks to see your portfolio be decimated and see the lulls within the market. But at the end of the day, I've seen what happens when you continue to accumulate and hodl and you wait for these assets in this market to turn around and the bull cycle to continue, especially when it comes to one of my biggest holding, XRP, and the company Ripple, and them fighting the good fight, trying to solve a real world problem. I think it was something like 16, 17 quadrillion dollar problem. Like, that is really exciting. And if you can only imagine, if you have the ability to hodl a good portion of those assets into the future, what do you think, your financial situation is going to be in that regard? Or you take this approach and you get we'll just say scammed, but you get fooled by the fraudsters out there, the JP Morgans and the big powers that be of these FUD and negative campaigns, and you sell your assets and come to find out 10, 20 years down the line, they've made a crap, they made billions and maybe trillions of dollars off of the assets that you were holding. Just be very, very diligent about doing your research, having high conviction in what you're investing in, and realize when you are investing into this, as of now, the speculative market, this highly volatile market, that you know what you're risking. So put money in, obviously, that you want to protect to the best of your ability, but just understand that if you do invest your money, there is a high, there is a probability of you potentially losing out on that money. And with that, and you having the ability to pay your day-to-day expenses, your bills every month, and you're not really worried about what's invested into the market, then not only makes it you sleep better at night. All in all, stay strong out there, like I always tell you at the end of these videos, because they're looking to accumulate your assets, because they're looking to continue to keep their dominance when it comes to their wealth, their generational wealth. Coming over here, I really wanted to talk about this real quick. This is from Jeremy Hogan. He says, my Ledger Nano is a boring affair. I only buy what I understand. So there was a lot of people tweeting, kind of going through what's kind of happening right here. They were talking about, we have XRP Crypto Wolf was making a joke, said hashtag XRP maximalist confirmed. So the reason why I like this is because I've, from, I guess, a little less than 5 years, from my experience in this market, I've made a lot of mistakes and a lot of, following my favorite influencer or trying to follow the trends, whether it's like an NFT or DeFi trend or the next project coming out, trying to catch this massive tsunami tidal wave of money coming into it. Like, I've been rug pulled, I've been, scammed. I've experienced so much, and I've lost a lot of capital for the proportions that I put into this market. So I have a lot of mutual understanding and almost like a bias in regards of only buying what I understand. Not saying that I understand it, 100% through in and throughout in regards of like the technology and how it all works, but just from my understanding and the research that I have and my due diligence that I put into projects, that's truly where I'm at when it comes to my investing strategy. It's like, I need to have high enough conviction on my intelligence within this technology, blockchain technology and crypto, from my intelligence and me and researching about the companies, the people building it, and what the project's utility is, and where the future is headed for it, and all those things. I need to fully have a comfortable level of understanding what I'm going to purchase before I purchase it, and that's kind of where I'm at, and that's why I wanted to just bring this up to you. It's just like, you're going to get to a point, whether you're new or you're even where I'm at, or you've been in this market longer. I'm sure you've been to a point where it's like, hey, at this point, I'm just going to, in a sense, protect my capital and invest in projects that I really have high conviction on, and then I understand that are going to have some staying power when it comes to, decades to come. So I really wanted to throw that out there. I want to thank Jeremy Hogan for putting this up there. And this really quick, it says crypto market volatility shows need for enhanced regulatory and law enforcement frameworks. Bank of England. The central bank said the growth of the crypto market did not pose an immediate threat to the United Kingdom's financial system, but had the potential to do so in the future. Coming out here, this quote says, we need now to bring in the regulatory system that will manage those risks in the crypto world in the same way that we manage them in the conventional world. So I wanted to talk about this because that's one big thing we've all been crying about and screaming and shouting it within the Twitter community, YouTube, especially when it comes to like the SEC's enforcement they're pretty much strangleholding the industry, especially when it comes to Ripple and XRP, library, and so on. It's like, all we want is a level playing field, and all we want is regulatory clarity so these projects and these blockchain companies know how to proceed forward so the space can flourish. We want, this regulatory framework, as they talk about, it needs to be fair and just to allow this technology to flourish and not be hindered. And yes, they try to compare it to, hey, we need to have, a similar framework to, our traditional systems. So it's like, well, this isn't like the traditional system. So we need to have something specific and pertinent to this system. Whether we have to create a new government body that are filled with experts within this industry, then that's what we have to do to make sure that we get the most and best out of this space. So that's pretty much what I wanted to talk about. It's just like, we definitely need that. And I agree that we need to have an enhanced regulatory and law enforcement framework, or just regulatory clarity and some sort of guideline that all parties can abide by to, combat the volatility within our market. And as time goes on, as we get, way beyond under $1 trillion market cap, the volatility will slowly dissipate as well. But I know that was a lot, 17 minutes of just blah, 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 blah. But that's kind of the update. That's a conversation I wanted to have based on the topics I've been seeing in the community. Make sure you subscribe to the Crypto is Key Conversation YouTube channel. I'm going to continue to bring you great content, talk about some of the major topics that's been happening within our industry, just sparking a conversation. Make sure you follow us at Twitter at Crypto is Key 1. I really appreciate the support. We're really excited to grow these accounts. With all that being said, stay strong out there. Be safe.